Welcome back, fellow investors and traders. Jeff here with another video. And in today's video, I want to talk about Zoom Video Communications, ticker symbol ZM. This is by far one of the hottest tech stocks on the market, has been for well over a year now. The thing about Zoom, guys, it is extremely difficult to put a value on a company that is perceived as changing our future and actually changing our present. So we all know from the COVID-19 pandemic that really hit here in the United States during the month of March, and all the uncertainty that come with it, where basically all Americans were sent home to work from home, how powerful of a tool Zoom video became for people. And that is really what has sent this stock skyrocketing over the past year. 1 year ago in October, this was a $70 per share stock, newly out of its IPO, now trading at over $480 a share, and has seen a 52-week high of $530. So this stock is absolutely on fire, has over a $137 billion market cap. And so some of the companies that have recently IPO'd, like let's talk maybe Snowflake and Palantir, I think those type of companies would be happy if they just had a fraction of the amount of success Zoom Video has. This company IPO'd at the right time, and it was in the right type of situation. The reason I say Zoom Video is very hard to put a value on is because what the stock gives us on earnings does not quite match the market cap, okay? For a company of this size market cap, $137 billion market cap, they should be actually cranking out a lot more earnings. But if we continue to have problems with COVID-19 and things continue getting shut down, or we stay somewhere in between that, Zoom Video is viewed as an extremely valuable tool for our future, and I think this stock can continue to grow from here, even though it is extremely expensive by all metrics. And most of the time, I would be the type of investor to tell you to take profits here at the $480 level. I would have probably told you to take profits a long time ago, but this is a very difficult stock to put a value on. We're going to get into all the fundamentals. We're going to talk about earnings, and I'm going to try to help answer the question, is Zoom Video headed to $600 per share? Before we get started, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. So when I say I think Zoom Video is kind of a mystery stock, I mean every word of it. I think if you watch this video from start to finish, you will see exactly what I'm talking about. Is that a lot of things about this company do tend to contradict itself. Let's start right here with its most basic fundamentals. Its market cap, like I mentioned, $137 billion. Let's go right down here to their PE ratio. Okay, 616. This is probably one of the most expensive stocks on the market by PE ratio, okay? Which tells you right from the snap, this is very, very overvalued. Is that all indicators would tell you not to be buying Zoom at $480 a share. As a matter of fact, going off that type of PE ratio, this stock should be selling off massively, and yet it just continues to grow. It's a mystery stock, right? So from here, we're going to take a look deeper into their fundamentals. And I'm sure a lot of people, me included, say, you know what? This company probably has really, really poor fundamentals. I even talk about that in the first video I published about Zoom back in May. I'll have a card come up right now, so feel free to go back and watch that one. Let's take a deeper look at their statistics and fundamentals, though. It actually starts to tell a different story. But their profitability and their management effectiveness is actually spot on, very, very good. 17% profit margin, 17% operating margin, +8 on return on assets, and a positive 24% return on equity. So to say the stock has gotten a little bit ahead of itself at the $480 mark and that very, very expensive price to earnings ratio, they actually have really strong profitability and really strong management effectiveness. And we are going to take a look at earnings here in just a moment. Their quarterly revenue growth, 355%. That is a very, very good clip. For a company that's went from $70 to $500, I actually would like to see a bigger number than 355%. Now let's take a quick look at the balance sheet. Now this should be a very strong vote of confidence. Why it is safe to invest in Zoom Video is that they have a $1.48 billion of total cash and only $72 million of total debt. That ratio is outstanding. It goes right to the top shelf in that category. It ranks right amongst the best companies in the world. It goes against Facebook and Google, some of the most fundamentally strong companies in the world. That is a fantastic balance sheet and a fantastic ratio. Again, too, they're also positive on operating and levered free cash flow. So, and that right there, guys, helps explain what I mean by a mystery, is that you can put Zoom Video into two different categories. You can say it's very bad fundamentally. It's also very strong fundamentally. A company with a PE ratio that has grown this fast, once we compare those numbers to earnings, very, very expensive. That is a bad metric to have in a stock. But when we look through further statistics, we do further analysis, I become even more confident in my investment because they do have a lot of very good metrics to look at in here. And believe it or not, this one surprises me too. Not a lot of short sellers, okay? Only about 4% short percent of float and about 2.87% short percent of shares outstanding. So despite the massive growth and despite the high PE ratio, this stock really does not get shorted very much. And if you look at level 2 charting, which I do every day, you will see a lot more call options flood in than put options. Not a lot of people betting against Zoom Video at this point. Now we're going to take a quick look at last quarter's earnings, okay? Their earnings come out on August 31st, just a little over 1 month ago. EPS actual was 92 cents, and their EPS surprise, they beat by 47 cents. They had a nice beat on EPS. Here's where things get a little bit uncomfortable for me again. Like I said, plays back into the mystery thesis. The revenue actual of $663 million beat by $163 million. However, a company with a $137 billion market cap should be kicking out a lot more revenue than this, okay? Not to say that I think in any way, shape, or form that Zoom is a sell here, and even if you take the COVID-19 pandemic out of the picture, I think this company is still extremely valuable, still has all the ability to grow. It was even growing before the coronavirus really hit here in the US. And here is a quick look at their forward guidance. They actually guided down on EPS. The estimated report date is December 1st of 2020. They guided down to 75 cents on EPS, but they guided up on revenue. Again, that kind of presents a little bit of a confusing scenario. I'm going to look at it as a guide up though, okay? Because they're expecting at least $30 million more of revenue in this upcoming earnings report. So even though it might take a step back on EPS, the revenue is trending upward, and that's my opinion, the most important thing is to see those revenue numbers blooming and getting much, much bigger. So let's try to connect the dots here a little bit. Why Zoom Video is so valuable, okay? Obviously, it really starts from the ability for people to work at home. Is this going to be a permanent shift? So once the coronavirus has been diagnosed and perhaps future takes a turn in a completely different way, does everybody go back to their jobs? Zoom Video is what you would call a pandemic darling, okay? It has really, really become more valuable, and their earnings too. Now, like I said, I'm not trying to downplay their earnings. They did have a very big beat percentage-wise on the last report, but the more of a threat there is of COVID-19, the more stay at home and the higher risk is perceived. That is more and more beneficial for companies like Zoom Video and of course Microsoft with Microsoft Teams. So let's talk about a couple recent events that have probably got people a lot more scared about COVID-19 in just the past couple of weeks that could potentially make Zoom Video even more valuable. Now, probably the most obvious one is President Trump and the First Lady both getting COVID-19. It was even being reported on all weekend, some of the events that were going on. And so this hits home, is that the president of the free world got COVID-19 and his wife, and now there's a lot of controversy surrounding that. Another big event that happened over the weekend too is that COVID-19 canceled some NFL games. As we all know, the Tennessee Titans and Minnesota Vikings did not play over the weekend because X amount of players tested positive for COVID-19. As we all know, this guy right here, Cam Newton, the quarterback for the New England Patriots, did not play in last night's game. He tested positive for COVID-19. So between this and our president getting the virus, this re-accelerates all the worries about COVID-19, about its ability to spread, about how deadly of a virus this is. Also kind of, like I said, it has a reverse effect for companies, restaurants, bars, that kind of thing. Some companies are open up at half capacity. Some restaurants and companies are just starting to think about opening back up. And now with these things kind of taking place, this being in the news, probably be just another sign for people to stay home or businesses to continue keeping their employees at home, which again is a catalyst and a huge boost for Zoom Video to continue growing. Here's one thing I do want to point out. Do I think Zoom Video would be trading at $500 a share if it wasn't for COVID-19? Probably not. It probably would not have seen the massive amount of growth it did. So from here, let's ask the question, is Zoom Video headed to $600 a share? I'm going to share with you my honest to God opinion on that. Guys, I want to own Zoom Video. It's been a very great long-term position. As a matter of fact, I have a position, I have a $70-something cost basis, okay? I haven't even bought shares of the stock in quite a while, and the position has performed very, very well. So I do want to own the stock. However, there's too many intangibles that are kind of hard to wrap your hand around. Also, like I said, being that is so fundamentally overvalued right now, it's hard to say when that will really reverse and take a toll on the stock. So I would not place call options bets on Zoom. I want to own the stock and perhaps capture the gains between here and $600 a share. But I do not feel confident enough in it trading up to that level right now, especially being with such a huge market cap, that I would be placing options bet on it. And in the same tone, I do not feel confidently in the opposite. I would not buy put options on this stock. I know its growth potential. I thought this stock was starting to get a bit overvalued at $250 a share. Now here we are almost 100% later. So I think $600 a share is in this company's future. That's going to push that market cap up even higher. We're going to have to see another earnings report come and go before we can really justify its already inflated PE ratio and market cap. But as far as I'm concerned, I'm staying long in this company, and I think 600 will be somewhere in the next few weeks or possibly months. So that's all I got for the video, guys. Thank you as always for watching. Go down in the comment section, share your thoughts and opinions on Zoom with me. I always do enjoy hearing that. Thank you as always for watching the video, and have a great day.